But across all the research we did over the last 4 years globally, the one thing we as women don't do together is talk about money. And being an outsider coming into the financial services, I was curious about, God, why don't we do this?
Start talking to people about it. And actually what I'm amazed is when I ask people what are they doing in their pension, some of the answers I get. And I just think people don't talk about it enough. So talk to your friends, see what they're doing, talk to others, because I think it's amazing how much you can learn from actually the people around you.
So welcome everybody. Two heavyweight veterans of the financial services industry this evening. There are two women with significant backgrounds in banking, global banking experience are with us. And the way that we're going to do this evening is we're going to host each of them for a fireside chat of about 15 minutes. We're going to put the breakout rooms in between. You can think about your questions as you go along. And we're going to kick off with Lesley Tully. So welcome, Lesley. Lesley, with a degree in design and previously head of design thinking at the Bank of Ireland, has kind of gone over to the dark side and has taken the plunge and is now a founder of her own startup business. And so she is founder and CEO of Penny FS Technologies. So perhaps we could start, Lesley, with you just telling us a little bit about Penny Technologies and what you do and why you do it.
Sure. Thanks, Mary. It's great to be with the AwakenHub gang today. I'm CEO of Penny Technologies, and we're a company that is solely focused on the financial unmet needs of women. And our mission is pretty simple. We want to help women achieve their financial freedom. And we do that in a number of ways, primarily through our technology, which looks at understanding how women think, act, and feel around their money. And we combine behavioral economics, so how you make decisions, with neuroscience, why you make the decisions you make in order to produce better outcomes for our customers and help women achieve their financial freedom.
And I first saw you on the stage at InspireFest, Lesley, a few years ago, and the talk that you gave that day really stayed with me. And since then, I think you've conducted a lot more research into the sort of the backgrounds of the workings of between women and finance. Like, do you want to just maybe tell us a little bit about that and some of the themes that you focused on there?
Yeah, sure. So Penny came to me through an insight, which is that women talk about everything but money. And it's this really curious thing. We talk about the most private details of our lives, from our healthcare, fertility, our personal relationships. But across all the research we did over the last 4 years globally, the one thing we as women don't do together is talk about money. Being an outsider coming into the financial services, I was curious about, God, why don't we do this? It's an extraordinary thing that we don't do together. And from that insight, I started to wonder about how much that is costing us. And to sidetrack for a second, I've grown up in Ireland. I've grown up through a marriage referendum, divorce, the abortion referendum, and I've seen the changes women have gone through. And I've also seen the lack of financial empowerment women have had from the 70s right through to today. And so it really started to bother me. What are we doing about this? Why aren't we talking about it? And what impact is it having on us today? So I left my job and I set up Penny Technologies. I worked with 2 international research institutes. We did a global research study with women from 7 different cities across the world and talked to hundreds of women in their homes for hours, and really covered every subject matter, not just finances, but their whole lives. And from that, we were able to deduce some really telling insights around how they think and feel around money, what's holding them back, why are they holding themselves back, and how can we solve this problem? Because it's my personal and professional view that financial empowerment is the last taboo as women we need to solve for. And so that's what we're trying to do with Penny.
And maybe perhaps you'd give us a few examples, Lesley, in terms of what that ends up looking like for a woman if they just drift through their life and they don't make any proper preparation for their, later years and things like that, maybe?
Yeah, and look, this is some of the stark and sobering facts. On the positive side, we hold so much power. Women actually drive the world economy. We control more than 300 trillion annually in consumer spending. In aggregate, women represent a bigger growth market than China and India combined, right? So we have a huge amount of control and power. And yet, 2/3 of us end up in poverty or close to poverty in retirement, right? Women on average live on 60% less than men in retirement. And why is that an issue? Well, we live longer, we are paid less, and yet we're higher educated. So there's very real consequences to us today not talking to each other or other people in our trusted circle about our financial needs today and into the future. And there are other kind of macro forces. I mean, COVID is one thing, but the rise in automation is the next, you could say, pandemic coming down the road. There's going to be between 40 million and 160 million jobs by women displaced by 2030 due to automation. So what does that mean? Well, what that means is if women aren't tech savvy and financially savvy, we are going to be left behind. Not really through any fault of our own. We're higher educated. We work as hard as men. We are the majority of the workforce. But because we're not enabling ourselves financially through equal pay, taking care of our pension provision now, making sure we have enough tax credits, making sure we're planning and looking after our financial well-being today, it means when these big forces come, we're not going to be prepared and we're going to be left behind. So that's kind of negative. That's some of the stuff that we need to be aware of today. On the positive side, women are higher educated and continually tend to be higher educated. There are more PhD females in Ireland today than there are men. There are natural things that women do, like we're very good savers. And there's some myths that we need to really burst around women and finances that we can play into and enable ourselves to move forward. But we need to start having the conversation now. It's important that we start driving and changing the gender pay gap, the retirement pay gap. So, in 10, 20, 30 years' time, we're not reliant on a state retirement system, which won't be there. And personally, I don't want to see females, I don't want to see men, but I particularly don't want to see females choosing between having electricity and heating or getting their hair done, to be really kind of quaint about it. I don't want to see them making that decision. I want to see women financially empowered today when we're at our most productive, we're at our most highly educated, and we're ready for whatever challenges are coming our way.
So I've just seen a question flashing up there in the chat box from Catherine Muldoon, and it's related to something that I was going to ask you about, actually, Lesley. One of the really infuriating stats that I heard last week is that financial advisors don't mention angel investment as an asset class to 90% of their high net worth female clients, because they don't feel it's appropriate for women to be taking risk with their money. And to be investing in startups, they see as something that is far too far on the risky side of the scale to advise that. I mean, what do you think about that, and what do we as a nation need to do in terms of making sure that women have access to that sort of advice?
Yeah. So before I get into that, I'd be very clear to say that I hate running into a conversation that I'm positioning men against women. It's not that. But traditionally, financial services have been designed by men because they were here first in terms of building financial services. And the challenge with that is there are these ungodly misnomers around risk and women. The reality is women are not risk adverse. We know this from the research. We have neuroscientists who have worked on this in other areas around debt. And what we've understood from women is men and women fundamentally look at risk differently, right? Men will look at a risk profile when it comes to an investment the difference with female investors is they look at it in terms of priorities. Now, that does not mean they're risk adverse. If I'm looking to purchase my first house, making an investment in a startup is not a priority for me at that time, right? My priority is getting my mortgage and paying my mortgage. And so what's happening in this discourse is that, you know, these myths are circulated that women are risk adverse, that they tend to like not invest or want to take on anything that will challenge the status quo. So they're not being presented with the options, right? And what our research has said and what we are trying to do is actually inform and give women greater optionality, including angel investment. I've spoken with a number of female angel investors from my own company. And really, and it was said to me by a great woman, a wealth manager, that women just want a different level of information. They want a higher quality of information when it comes to making a decision. And there's nothing wrong with that. And we've also seen it from the neuroscience side of the research. We've seen that men typically make decisions based on 3 pieces of data, where a female investor will need 8 to 10 pieces of data.
So the men go a little bit more with their gut feel, would you say, Lesley?
Potentially, or you know, potentially they're more familiar with it. There's a lot of different factors to take into play. It doesn't necessarily mean women don't take risks or, you know, aren't these kind of mavericks out there. They just need things to be a little bit differently. And one of the problems with financial services is it completely ignores the differences in men and women and how we think and act. And that's one of the challenges that we're trying to solve for.
Yeah, actually, it reminds me. I was a woman come up to me at a conference event at DCU one day. I'd been talking about angel investment, and she came up and buttonholed me and said, "I've got €10,000 and I was going to spend it on a new kitchen, but should I invest it in a startup instead?" And I must admit, I did actually say to her, "I really think that you should probably spend it on the kitchen first, and then if there's some left over later, then maybe put it into a startup. But no, go and get your kitchen." So one of the things that you mentioned as well when we chatted earlier, Lesley, was about, and I wonder if this makes a difference, the rise of single women. So surely the single woman who's going to be a single woman must take charge of their finances because there's nobody else to abdicate that to. Yep. Is that the trend?
Yeah, well, you know, I mean, there's a lot of upheaval in the world at the moment. And one of them is in the sense that the regular structures are now very, very different. Today, there are 1.2 million single women in Ireland today, right? Why does that matter? Why is that important? Because traditionally, when you got married, your husband worked if you're in a heterosexual relationship and you had 50% access to his pension, right? That's not the case anymore. So who is going to fund your future self? That is something we're going to have to do today. And so, you know, it's very relevant, these massive changes that are happening across the world. I've mentioned automation, the rise in kind of more single women having to look after their financial selves in order to provide for themselves. It's a very real thing. I mean, we joke, a pivot in penny might be that we have a dating service for men that, you know, for women who are looking for men with great pension pots, and that might be the new the way of pairing with men. But no, single women are on the rise. We're higher educated. We need to look after our financial selves. There's no reason why we're not, other than having the right access to information and talking about it more than we are right now.
So what can we do about this, Lesley? What do we need to take control of?
Well, there's a couple of things, a couple of very practical things. One of the first things we've learned through the research is your mindset. And certainly women have been traditionally taught much more of a negative scarcity mindset about money. And what I would say today is be aware of how you think about money. It comes up a lot, obviously, when female founders are going for investment. We tend to go for less money. We tend to be a little bit more reluctant to go for the big numbers. And that comes down to how we're conditioned. So one of the things we do in Penny is we teach you about your money mindset. And a tip for your entire audience tonight is your money mindset is really set down before the age of 7. And that comes down to a whole lot of behaviors, but you can change it and you can learn from others around how they manage and look at money. So that's the first thing. The second thing is to be really aware of the language you use. and the financial services use around money. Women are tend to be spoken to around, splurging. We're told to limit, restrict our money and how we spend it, rather than men are told to be more daring and invest. And that's just the biases that have come through from tradition. We need to be mindful of that, because that does change how you look at your financial life. And then thirdly, really, it is, take the emotion out of money. There is no such thing as bad or good with money, right? There are behaviors around it. But the good news is women have much better debt repayments rate. We're much better savers. We're far more loyal. And as we know from the case studies from Africa, for every dollar an African woman earns, she puts 90 cents back into her local economy. So when we say women drive the world economy, that fact is absolutely true throughout the world. So they're just some of the things that I would ask people to think on after our chat.
I'm going to ask you to save some of your tips to the very end, because I'm going to round off this evening with your top tips from yourself and Rachel as well, for everybody on the call, Lesley. But you touched on it there, and it's something that came up in some of the audience questions that were submitted earlier. It was about the differences between the way that women and men seek investment. So do you think that women do ask for smaller sums of money when they go out looking for investment for their startup? Is it different? Is that something we should be conscious of as well?
I mean, I can only speak of my own experience. I do think, from what I've learned, we are more reticent about being bold around finances. And I do think that's because we've been conditioned a certain way. I do think that scarcity mindset that women are taught on a number of different themes has an impact financially. So it stands to reason, when you go to start a business, that you will reduce down the value you see your business or the number you go for. And some of that is out of fear, understandably. So yes, I do think that is real. I do also think that what I've learned from the female entrepreneurs I surround myself with, female entrepreneurs, and I'm not saying men aren't, but the female entrepreneurs that I surround myself with are very practical, are very realistic. They tend to be maybe do the work and then boast about it, rather than the other way around. And so sometimes that can creep into fundraising, where, you have to sell large. That's the point of it. Investors get excited by the potential of the return you're going to give them. And being moderate doesn't necessarily play into that narrative. I'm guilty of it myself. I'm not going to oversell something unnecessarily, because I'm just not going to. But there's a balancing act that you need to have. You need to excite investors to the scale and the potential they're going to get back in their investment, whilst being able to achieve what you're setting out to achieve.
Thank you for the food for thought, Lesley. And Lesley will be coming back to join us for the panel questions later on. So be thinking about any questions that you would like to ask her. So we're going to move on to our next guest, and we are really thrilled to be joined this evening by Rachel Naughton. So Rachel has years of experience in corporate, commercial and retail banking, global experience, and she is now head of SME and asset finance at the AIB. Her teams work on a customer-first ethos as they develop new products and propositions. So an ideal opportunity for everybody on the call this evening to ask a real live SME bank person on customer focus and how they come up with those products for us all. So maybe we could just start with you giving a little introduction to yourself and your work, please, Rachel.
Okay, thanks, Mary, and lovely to be here with everyone from AwakenHub. So I suppose I've had an interesting past. I started out in accountancy, and then I went to Australia, actually, along with everybody else. And I got into floating .com companies on the UK Stock Exchange from Australia. which was quite interesting in its day. And certainly I was surrounded by people who were thinking big and selling large, as Lesley was talking about. Then came into AIB, and as you said, have covered a lot of ground in the bank, both in Ireland and as we opened up abroad in Europe and the States and Australia. But we have very much come back to our base in Ireland as the years have gone by for well-known reasons. And now I'm looking after SME and finance and leasing. In Ireland, I spent 10 years in the UK. So I just got back about 3 weeks before COVID, and my furniture arrived back the week before COVID. So I was a very lucky girl. But yes, that's a little bit of my background, Mary.
I'm just going to start you off with a really basic question, Rachel. So my questions for you, I think, this evening are quite practical questions about how founders interact with the bank, really. So maybe you could start off by telling us who on earth founders should actually engage with in their bank. Who is it that they should be talking to generally about their business finances?
So I would say, firstly, we have a lot of presence on the ground, certainly in Ireland. In the UK, we have presence in the bigger cities. But first and foremost, I would always say go and talk to somebody locally, because they will know how to navigate the bank better than you. But similarly, if you go to our website, we do have quite a good SME website, and it does try and signpost you where to go. But I suppose what I would say to anybody, you probably need to think before you even get to that point, because there's a lot of different products, there's a lot of different options, and sometimes, actually a lot of times, people come to us and they're not really sure what they want, and sometimes they don't know if the bank is trying to push a product or whether they're trying to suggest the right product. So what is really useful, and what a lot of people do, is they use their accountant as a sounding board to see what type of product would best suit their business presently. And then it's much easier to actually find out exactly who is the person that will help you.
So I think that what you've described there is a pretty sort of normal state for a lot of founders, particularly when they're in early stage of their startup, in that most of the professional services people that they deal with, they don't really know what the right questions are to ask, or what the questions are that they should be asking. I think that that's how they probably feel about their accountants, their legal teams. It's probably how they feel about Invest Northern Ireland and Enterprise Ireland, in that they don't know what questions they should be asking them either. So it's not a surprise really that's similar with the bank. So an accountant is a good way to start. Any tips, Rachel, on how people should go about choosing an accountant?
I think what I would always say, somebody who understands your sector is really important. An accountant who is equally good at giving advice, but on tax advice, because tax becomes hugely important as you move forward. And I think somebody that you believe in and that you trust, that relationship is very important. So you need to be able to work with them, and you need to be able to believe in what they're saying to you. So I think that relationship is actually quite important. But I know, having dealt with a lot of accountants myself, that sectoral knowledge is absolutely huge, because what they can tell you is, are you similar to others in your sector? What are they doing? What are they seeing? It's absolutely hugely beneficial. I'm looking at something personally on renewable energy, and I have to say my accountant has been phenomenal. She is all over it. She knows all the issues that could be there. Similarly, my lawyer is very good at giving me advice and telling me what to think about the questions to ask, who to talk to. So
my advice to people on this would be very similar to yours. Approach it like it's going to be a long-term relationship with your lawyers and your accountants. Do not find them out of the yellow pages. Go with a personal recommendation from somebody else who's in a similar situation to yourself, I think. And there's a lot of chat, and there has been a lot of chat over the last few years as well, Rachel, about bank lending in Ireland. And I don't, I'm not trying to put you on the spot here, but maybe you could talk to us and tell us a little bit about sort of what the process is in terms of getting a bank loan and how the bank perhaps decides on which people and businesses they're going to lend money to, just to give people some pointers around this.
Yeah. So firstly, which may be news to people, the bank really does want to lend money because that's how we make money. So we actually genuinely do. That's
you
what
heard
I'm
it first at AwakenHub, folks. The banks want to lend you money.
Yeah, that's what I'm judged on every week of my life. So that is the first thing. However, we equally have a responsibility not to give money to somebody who can't pay it back. And actually, that's for their good, even much more so than ours, because getting into difficulty is not particularly nice situation to find yourself in. So what we try to do is see what is your ability to repay and are you comfortable making those repayments? So what we will do firstly is if you have a business plan, which all businesses should have, we will go through the business plan. What's really important, and this is a bit like being on Dragon's Den, is that you understand the cash movement, what cash is coming in, what's going out, what free cash you have, and how much of that you have, because that's what will be used to repay your loan. So that is key to what the bank looks at. What the bank will also look at, particularly for small companies and startups, because many of you will be sole traders, is they look at your current account and they look at what has gone through your current account and how much.
Your personal current account?
Yeah, it can be your personal current account if you don't have a business current account. So that's, and even a personal loan is done in the exact same way. We will look at your personal current account, all the turnover is there. And actually our systems already will have, a limit that we're willing to give you. That's there. It does that automatically. So based on that, we will look to see how much we believe you can comfortably repay us over the term you are looking for. Sometimes, and I would always say, if you get a no, find out why, because sometimes it's the amount you've sought is a little bit bigger than we want to give. And it's always worth going back to see, if I went for a smaller amount, would I get that? If the bank doesn't come back to you with that offer of a smaller amount or a longer term or something else. Similarly, I think you need to think about what you're trying to finance. So often it will be much easier to get a lease if you're looking to buy, a car for your business or a van than actually getting a bank loan, because the bank has security. So if you don't pay your loan, they just take back the van or the car. So it's much easier to get those. There's less information required. It's very straightforward, very automated, very quick actually at the moment. So that's another form. And similarly, one product that people in the UK use a lot, but it's not used widely in Ireland, and I do not know why, is your invoices. So if you have a lot of good customers and you wait quite a while for them to pay you, the bank have a product which is called invoice discounting commercial finance, but we will give you a loan which is backed up by those invoices, and it just helps you with your cash flow. It's a really good product, hugely used in the UK. I just don't know why people don't use it that much in Ireland. So again, it's important to just be aware of all those options when you're thinking about what financing you want.
So going back to the invoice discounting, Rachel, what's the charge that the bank makes for something like that? Like, does the bank take a percentage or?
So it charges an interest rate actually similar. So it's like an overdraft. The limit will go up and go down based on the invoices you have there. The rate will differ based on how good your customers are. Okay, so if you have the likes of Tesco and Primark and very strong customers, the bank will charge less because their risk is less. Similarly, if you have a broad variety of customers, that is good for the bank. If you're very concentrated on one customer, that's not very good. Okay, so the interest rate will vary based on those things, and they are the main criteria.
And I suppose the other question that I would like to ask you about this is, if you do go for a bank loan and you get it wrong, do you get another chance? Like, can you go back and resubmit it?
Absolutely. And I would say do resubmit it. I actually, to be honest, I think banks need to do more on this side also. And it's something we're looking at when we say no. Could we have said yes to something different? And actually, to be honest, as the loans get bigger, we would have those conversations with customers. But for small loans, we just don't have the ability to talk to every single customer that applies for a loan, because we do on average about 100,000 loans a month. So it's just impossible to get to talk to everyone. So I would strongly advise that you go back and try and just get feedback as to why it didn't go through, because it'll often be the term was too short, you looked for a little bit too much. But you should find out, because that will allow you to have a better chance of getting it the next time.
Mm-hmm. So I have a couple of our audience questions here that were pre-submitted, Rachel, that I'm going to just ask you about in the last few minutes we have before we go into the next breakout. A couple of them are around, how do you fund your business up to that point where you've got your minimum viable product? Is the only option for you there to self-fund that, or is there a way that you can obtain finance from somewhere?
So there is no doubt, and we've actually done a fair bit of research on this, a lot of people use self-funding, friends and family. So always number one. And actually, the one thing about initially self-funding or using friends and families is, as you go further and you seek funds from other people, they know that you and those nearest to you believe in your product. So that is actually powerful in its own right. However, there's definitely other options. I'm a huge fan of grants. When I was in KPMG, I did thousands of grants for SMEs. There is a huge amount of grants both in the UK and Ireland and further afield, because most countries tend to do the same grants, particularly for startups. There's grants to get somebody to help you do your business plan. There is a lot of grants at the moment to help people go online. There is grants for research. There is grants for staff. So, being very close with your enterprise offices and all those government schemes is hugely important. I think equity and venture capital will come in if your product is groundbreaking, or it's new technology or a new way of doing something. They will come in before your minimal viable product if it's really groundbreaking, because you probably do need money to do that. But, that's for fairly big projects, I would say, that are really going to make a difference.
And any advice for people that aren't growing those huge multinational businesses, people that are doing something that is more a lifestyle business, or, something that they don't intend to grow and sell? What sort of products can they access?
So I think if you just want to keep the business at the size it is, an overdraft is something that most people need. I would strongly suggest not to use credit cards. They are by far the most expensive form of debt. Get your overdraft, understand your cash flows. As I said, leasing is a very good way. And there's always grants, no matter what stage you are in. What I would say to you is, if you want to keep your business at that level, where do you want to go with it? People generally grow their business because they want to sell it, which is fine. But if you just love what you're doing, then that's great to keep it ticking along. And I would suggest, in keeping it ticking along, you probably want to get into a position where you've no debt, and that your profits are very much keeping you afloat. Because if it's a lifestyle type business, you want to feel that you're actually making money to put into your life and not pay back the banks as such. But I think usually debt is for growth. And, that's why you want it there, to help you grow and to start to make that happen quicker than putting in your own funds.
And another question that I have before, and I think this is probably the last question I will ask you, Rachel, before we go off to the next breakout room here, is how much time do you think that people should spend each week or each month on examining perhaps their own personal finances, but also their business finances? So I'm not talking about the work that their accountant does. How much time do you think a founder should spend looking at these things? Is it something that you should spend 10 minutes a month on, or is it something that you really should invest a bit of time in?
So I'm certainly going to say the latter. I would say if you're not spending at least a day a week, you may not survive. I've worked with so many SMEs, and the biggest reason, even for medium-sized companies, the biggest reason they go down is because they have to manage their cash. So, like, you may have the best idea in the world, you may be a great salesperson, but if you cannot manage your cash, you will not survive. So it's one of the things that is absolutely fundamental to success. So I would say spend a lot of time on this, because this is the one that will catch you out hugely.
So you heard it here as well. That's somber and sobering advice there from somebody who knows that you're not going to get away with doing 10 minutes a month on your finances. You actually need to give it a little bit more attention, because running out of cash will get you every time, won't it, Rachel? Yeah, for sure. If anybody has a question, would you like to raise your hand? I'm going to ask Mary Carty to just work around this, because I think Claire's voice has gone altogether now. And I'm going to just kick off with a question for both Rachel and Lesley. So, Rachel, would you like to take this first and get your opinion on this? What do you think the areas are that people should try and do themselves in terms of financial oversight and financial awareness, and what bits should they put out to an expert? I'm going to say do yourself what you're comfortable with and what you understand. If you don't understand it, don't do it. And that may seem very basic, but you will probably understand your business best and the cash flows, and you should probably get your head around those. But everything else, tax, etc., I would outsource, because you need somebody who's looking at that day in, day out. Lesley, what do you think?
I would say, unless you are particularly interested in self-harming or committing yourself to John of God's, I would say most certainly experts in tax planning, Rachel and her colleagues in AIB and similar, Bank of Ireland, there's some amazing banking people that you can talk to that doesn't actually cost you anything. And they know all the hacks around the system. So I would absolutely agree with Rachel. I think delegate that. Where I think you can own it yourself is, I would kind of challenge what Rachel is saying. I said some of this stuff is uncomfortable to learn, but there's a great confidence boost in applying yourself to things that you mightn't ordinarily feel comfortable with. So, there's so much information obviously out there, and kind of know your learning style. If you learn through a podcast, there's brilliant podcasts on finances and investing, and stick to the things you like. Too often, we don't actually look for the enjoyment in what we want to invest and learn around financial services. So don't forget to actually enjoy it.
Something else that we talked about in one of the breakout rooms that I was in was about women and pensions provision. So both of you, what should women be doing about their pensions?
The first thing is absolutely start. Pensions are one product amongst many that women should be providing for themselves earlier, the better. So before Penny launches, I would be remiss to say to anybody to wait for Penny. I would say start a PRSA, talk to your bank, talk to your accountant, just get started. It will give you peace of mind, and it's just something that we should and need to have sorted.
Rachel?
Yeah, I'd say the same thing. We had a conversation about this in our group, and I think the big thing is start talking to people about it. And actually what I'm amazed is when I ask people what are they doing in their pension, some of the answers I get. And I just think people don't talk about it enough. So talk to your friends, see what they're doing, talk to others, because I think it's amazing how much you can learn from actually the people around you, and take it in small steps, because that just breaks down the problem. But I think you need to start the conversation, and exactly as Lesley said, start doing something, because all of a sudden it comes upon you quicker than you expect.
Mary Carty, any questions from the floor?
Yes, lots of questions. Rachel, I'm going to start with you. Question from the floor. Are you more likely to secure a larger loan if you have an investor on board?
No. What I would say to you is, that will certainly give credence to your business plan. And I suspect indirectly, if an investor has bought into your business plan, the bank probably has a good chance of buying into your business plan. Now, they'll both have different risk appetites. An investor will have a much higher risk appetite than the bank. But what the bank will always look at is your cash flows. They will look at your past, and they will look at what's in your business plan, and that's how they will make their decision. It is always based on the same formula. You know, what cash do you need to cover your debt, both the repayment and the interest? That's all they're interested in.
Great, thank you. Lesley, I've got one for you as well. That really interesting insight about the 8 pieces of data, the information that women need to make that decision. And you said men looked for 3. Can you tell me what those data points are that women want information on?
So, I mean, it was specific to kind of certain investment categories we were looking at. But if one of the areas we looked at it is how male investors make decisions into startups or businesses, and they tend to look at the industry, the track record, and the team. Right? Women also look at that, but they tend to look at the longevity of the potential business, who is potentially likely to come on board in the future, what's going to happen should the entrepreneurial team leave, and what the criteria is around that team leaving. And essentially what we kind of deduced when we synthesized the information is that women actually look at how to mitigate the risk with the information they've gotten around the investment, whereas men tend to take it at face value and be able to kind of, I suppose, absorb the risk with less information, but also with kind of, I don't do them a disservice, but more of a flahulak attitude towards it. It's like, it's a flutter, right? Yeah. Where women tend to be far more rigorous in the questions that they probe along the lines of communication and inquiry that they make.
Okay, so it's almost like a lot more due diligence in a way.
Yeah.
Attention to detail.
Attention to detail, yeah, and getting really satisfied themselves that the answers that they're getting back are enough to make them comfortable to make the investment. And some of the research has said to us that actually it showed that women are looking to make longer term decisions.
Yes.
Because of how they're approaching the decision-making process.
Thank you.
I am looking at the clock, and I'm looking at Sinead Crowley's face, and I know that if I let it go over tonight, she'll have the guts regardless. So just a quick mention, our next event is the 23rd of November, and we are doing growing pains from starting up to growing up, which is a topic that loads and loads of you ask about. I can see lots of stuff in the chat here about how to get in touch with each other. AwakenHub has got a dedicated page on LinkedIn. If you link with us there, we will link people up with you. Also, you can always find us on Twitter. We are Twitter Queens. Follow us on Twitter. We'll follow you back. We'll link you all up with each other that way, if that's a quick way to do things. So thank you all for joining us. I'm going to leave you this evening with our 2 guests, who are going to give us their 3 top tips for women founders and finance. So, Lesley, would you like to go first?
Sure. So my 3 tips are...
It's always 3, isn't it? Everything's
always 3. 3, because it's been proven that our cognitive load drops after 3 to 60%, and then and consequent extents. That's why everything is. I'm going to tell you 3 things. So my top 3 things are really understand the valuation of your business when you're going for investment, and try and triangulate it so you can be very confident that you've reached the right valuation for your business, because everything hinges off of that. And second of all, start the investment pipeline early. Don't go for investment when you need it. Start way before that. And my third step is always be 3 steps ahead of any investor, be it VC or angel, when they're asking why you are uniquely placed to solve the problem you're looking to solve for. That's what investors are looking for.
That's 3 fantastic tips. Thanks very much, Lesley. And Rachel, what about you?
Well, I'm going to just continue on Lesley's last one, because my first one was be prepared as you can. I think you cannot be too prepared, and I would always try and think of every single question that whoever you are going to, be it an investor or a bank or a customer, what they will ask you, and go through that with as many people as possible before the real one. Second, I would say go with and believe in your gut instinct. I think women have a great gut instinct, and I think they should use it a lot more. And thirdly, I would say don't let the challenges stop you. I think sometimes we can tend to see the downsides or the risks, they're all surmountable. So just think about how you can get over those rather than letting them bog you down.
I have my head down because I'm writing them down. They were also 3 fantastic tips, everyone. So thank you all for joining us this evening. We will see you again on the 23rd of November. We'll see you online in between times, and have a great rest of your week, everybody. And thanks very much to Rachel and Lesley for their insights this evening.